Good evening, folks. TopGunStockTrading.com, where we're neither bulls nor bears. We just want to be on the right side of the trade. Okay, getting right into the action today. This video is for Wednesday, January 8th, 2014. The spiders today, and the S&P for that matter, had a neutral float day on the back of those the Fed releasing the minutes as well as those ADP job numbers this morning. So basically a fairly light volume float, 96 million, probably average volume there today. And basically a doji day, if you will. Still working that inside bar action of this move down from the highs on the Christmas Eve, and then the in spirit of bearish flag working up, with the exception of this one down day on the 6th, and but still maintaining that in spirit of Barrett flag. Like we talked about yesterday, we have minor support down here at the 181.50, where you have gap fill as well as some prior resistance points, and then more solid support lower down at 177.50 line, where we have a master support level. There again, a proprietary Top Gun trading technique, and we'll be looking to buy the spiders at that 177.50. Again, if the spiders get above the high of this red bar here, 184.07, and confirm, we change our stance from what we are today of neutral to bearish, slightly downside, and then we'll change our stance to neutral to slightly bullish. And if it confirms above the high, we will shift our stance to bullish. Now, how does this affect our overall trading? Well, if we know where what our stance or our view on the overall market is, it can reflect or influence our potential trade setup. So if we're in a strong bullish tendency, we're probably not going to be looking for too many short setups. We'll be looking for more long swing long setups if we were bullish on the or positive on the overall market there. Looking for, if we continue as a slight volume float into the 15th, we're looking for a pivot date on the 15th of January. Our cycle work tells us that there's going to be a pivot date. So if we continue the slight upward bias on the 15th, we should get some downside action. Looking for the 15th to be certainly a down day. For as far as tomorrow, probably be a pause day right before Friday's jobs number, and then on Friday we'll get some volatility in the markets. Moving on to oil, we talked about yesterday a potential trade setup was going to be buy this doji here, the close here at 33.23. I had a buy set up for the USO at 33.19, but due to these last 2 days of pause days, basically a consolidation phase, I told you yesterday I was going to move my buy price further down to about the 32.52 level, and I'll show you here is why. If we go to the weekly chart, we'll see where that upsloping trend line comes from, as well as we'll see where that 32.52 level, second factor for our support there, comes in at the this low right here, I believe. Right there, 32.53 is a low there. I put it 32.52 just because it kind of is the middle mark between this upward sloping trend line and this. And also, as we talked about, the more symmetry you have on between the hits on the on a trend line, the more stronger support or resistance it is, depending on the slope of the trend line there. So 32.52 on USO, we'll be looking to buy that market. Moving on to gold. And the GLD, we'll look at the futures gold market. We'll stay within the gold ETF here. We'll look on the daily chart first to see what kind of action. Gold took a minor down day, but that's what we're looking for. Slight minor down day to go along with our hypothesis, or our hypothesis that this up action and slight drift lower is going to give us that in spirit of bullish flag there. And what we're looking to buy is this gap fill here at about the 116 level, as you can see on this day, this candle on New Year's Eve there. So we can get that gap fill, pierce a 116. We'll be looking to go long the GLD, assuming we could still maintain that slow, steady drift into that price. And we want to get some. What we don't want to see is some strong sell side action before we get the time count. Again, time count's another proprietary trading technique we use here at TopGunStopTrading.com. So we want a slow, steady drift lower into that 116, and then that'll be to buy. We don't want that steep sell-off or strong sell side action into that price, because it can, a lot of times, it can go right through that support level one lower. All right, so that's what we're looking for the GLD. Look at some stocks we talked about yesterday. ASTM's a small cap I still hold. I bought at the 345 level a week and a half ago, and today we had some good action on it. It's up 6.1%, or 24 cents. Okay, again. It didn't quite reach my target of 435. It did get to 429. So what we're looking for there is, if we can get one more burst up into 435, we'll be looking to sell. If it starts to consolidate here and these moving averages move up, curl out underneath of it, then we'll be looking to move our target a little higher. So real quick, a quick lesson here at In the Money. TopGunStockTrading.com. So what we're looking for here is basically get this. Well, let me get the right tool here. Trend line. Huh? Why isn't it drawing that? Let's get back there. Not good. If you can forgive me for a couple seconds while I get my charts fixed here. So I just want to draw a line. Can I do that? It's not letting me. Okay, so we'll just draw it off of this. So what we're looking for is this. We got that 5 up days here. Right there, and now what we're looking for is a small consolidation phase, and then boom, we have liftoff. Assuming it would let me draw my last trend line there. You can get the head, it moves up there to the liftoff. If we just continue surge up, obviously it has less energy, and we'll be looking to sell at the 435 level like we talked about. Looking at this 100-day moving average, it's at 451. So in between 435 and 451 is where I'm going to take my money off the table here. Since I don't have a very large position size, I'm just going to take it all off. Usually I'll take half off and let this second half break-even stops hit. Usually how I manage trades. But if I don't have a large position size, I'll just take it all off to maximize my my profits there. And we'll be looking for a small bullish pullback there. Maybe have some of these moving averages curl up, offer some support, and look to buy the stock at a slightly lower price. So that's ASTM. Another stock I do have that did not do so hot today, another small cap here, is DARA Biosciences Incorporated. It's got a big 7-cent sell today. Now, what's that mean to me? It doesn't really mean a lot, other than it did sell off a little bit. I have a mental break-even stop in this stock. One thing to note with these small caps is there's such a light volume float. Well, this one's got sold 2 million a day. But we get to be careful with these light volume names, is you can't really set a physical stop with your broker there, because these institutions will just steal that stock out of your hands. They'll see, they know where your stops are, and they'll sell it down to that price to get you to unload yours and then pop the stock right back up. So basically steal from underneath you. So what you got to do is set mental stops and kind of keep an eye on it. So that's what I have with these small caps or these low volume names, DARA. Again, manage your position size with these small. You have to manage your risk with these small caps, and I usually do 10% with any other trade, normally. But with small caps, low volume, higher risk, I'll even do a half position, and most of the time I'll even do a quarter position, and that's to mitigate the emotional trade. The biggest enemy of stock traders is your emotion. Obviously, the fear and greed is what makes the world go round and makes the stocks go up and down in the market. So you need to mitigate that emotional roller coaster with your position size. Moving on to some more familiar names, or bigger, not necessarily large cap, but certainly larger cap than what we have there. We have Boeing. I'm still in. Today, Boeing had a slight update, 31 cents. My stop out on this one is still going to be a confirmation above that 142. And if you don't know what confirmation is, you have to come on over to TopGunStockTrading.com in the near future. What I'm going to do is put together a webinar teaching all my proprietary techniques as well as techniques that you can find in a book. But obviously, with the caveat that those techniques are more well known if they're in a book, and they have a higher failure rate than some of the techniques that I use, but using them hand in hand, they all go together and they all develop and contribute to the overall picture and the overall decision-making process of taking a trade. So what I'm looking at to do here is 142 is my stop out, confirmation above that, and I'll be looking to get out of that. Otherwise, I'm feeling pretty good. This is I sold a vertical call spread at the expiration event in February, so I'm still sitting pretty here. Not really worried about this trade. Low risk, low reward, to be honest with you, but it'll be a couple dollar trade profit if it when it works out. Moving on from Boeing to Caterpillar, another major industrial name. Again, I shorted this up here at the $90 level. I like this large red bar action with average volume. It's still, again, it's got some 20 moving average support here with some in-spirit bearish flags going on. This hammer stick candlestick looks bearish, is a bearish sign. So it hammers on that 20 much more. It's going to break through that 20 and it'll go lower. Again, my expiration for this is it's a January expiration, so I'll be monitoring this trade very closely. I'll just look at the stop out at confirmation above this red bar high at $90.30. Moving on to Delta Airlines. This stock is this trade is going against me, so I'll be looking to stop out confirmation above this high, so above the high of 29.44. So we'll be confirmation of that tomorrow. We'll be looking to stop out of this trade. And again, that's one of the major reasons why stock traders are not profitable is they don't manage their trade and they stay in trades too long. So take your stop out and move on. There's another trade around the corner, and take out the emotions of your trade. FDX or FedEx, slight down day today. Again, it's a common theme with these last couple stocks that I'm in. Again, I am short this stock as well with a vertical bear call spread, and I like the action here. Again, the red bar high is where my stop out's going to be at 143. If we get above that, I'll be looking to stop out, but I'm liking this nice M-side bar action moving up, and again, failed to recapture that 20 MA today, and that's what I'm still liking that action for a downside move. Again, this is an expiration January 17th, so I'm still looking to be profitable in that trade, and I'll be monitoring that trade very closely. Again, if we get above this red bar high, confirmation, that'll be a stop out. Moving on to Yahoo. Yahoo got a topping tail. If you don't know what a topping tail is, that's fine. I teach that in my webinar, what exactly a topping tail is. It's basically a signal or pattern noting a top or bottom in a stock has been put in a topping tail with some volume. Again, I'd like to see more volume on this topping tail, but it's in the right spot on the chart. So if you're not in this trade, Yahoo would be a nice short. And you look to get in this short at about 41.42, 41.42 is where if I wasn't already in this trade, I would go ahead and short Yahoo if I could. Again, I'm not going to short it again or re-short since I'm already in this trade. But if you're not in this trade, 41.42 is a good level to short with a stop out confirmation above 41.72. So you have a tight stop loss. Small risk. And looking for this stock to move down, I'd say first target on this stock would be 39.34. So you're looking at a $2 move, a 5% move within the next week or two on that Yahoo stock easily. However, confirmation above this topping tail high would be your stop out point, so you have minor risk involved there. Nice trade setup. Cena, I stopped out today. This bar high here, 88.47. I closed above that. This trade moved against me. I stopped out today and took my losses with that. KMX, one stock that I am long. Again, proprietary technique of finding a master level here. Some other factors. Again, you don't ever want to take a one-factor trade, and I teach the different aspects or different dimensions. I like to call it a three-dimensional or a multi-dimensional trade. So you don't want to take a one-dimensional trade. You want to have multiple factors, if you will, or dimensions to your trade that influence your trade either long or on the short side. Again, neither bulls nor bears. Just want to be on the right side of this trade here. So if I go to the weekly chart, you can see a trend line that I can draw in here. Again, we talked about symmetry last time or a couple minutes ago, and this one doesn't have all that symmetry. So the strength of the support offered by this trend line is certainly not as strong as if it were symmetrical hits on this trend line. So let me get this drawn in here. We'll extend that off to the right. And as you can see, it's come into that trend line as well as a master level that I do not teach. I'll give you master levels. I won't teach that. There's some things I have to keep under the keep to myself, because if it gets out, obviously, the more people know about it, the less it'll work. So I teach, one of the things I do not teach is how I come up with these master levels. And you can see low there on yesterday, it happened yesterday, 44.63, and you can see that came right into that trend line, as well as the support level here back in the middle of June there. Another factor or dimension that I did use to create this or have this trade was, if you look back on again June 26th to June 25th, 26th, there's a gap up, and there's a gap, not necessarily a gap filled, but a gap open there, right there at the 45 level. So multiple factors or multiple dimensions. We like to be at least three-dimensional here at TopGunStockTrading.com, and you'll see you got two hits on that trend line. Another dimension or pattern that is proprietary is a three-tail theory, and that's shaping up pretty good. Not the tails aren't as long as I'd like to see them, but they certainly are there, and we're looking to get that third tail in there tomorrow for confirmation that indeed there is definitely support along that trend line and around that stock price, so that thing can go up. My first target, believe it or not, it's going to be at this red bar high, 46.45. So I'm looking to basically make a buck off that trade as first target. And again, this is a normal 10% position in my portfolio. So at that target, I'll take half off, set a break-even stop, and I'll let this thing run up and hopefully run up to my second target, which is going to be this master level up here, 48.18. All right, so that's CarMax. I got into that trade 2 days ago at 45.34. 45.34. So I'm about 9 cents out of the money on that, but I'm still I'm in the ballpark, and I'm feeling pretty confident about that trade as well. Some trades that did not trigger today, but I'm still are a Fox 3 alert that you can find on our website. There is Bank of America. Looks like Bank of America did trade up 8 cents today. I'm looking to short this stock at a Pierce of $17. And on another proprietary trading technique, and you can see one of my tools there, I'll go ahead and get rid of that, is the extended move technique. And this is pretty common sense, to be honest with you. Again, it's involved in my, I teach that in my webinar, and it's a pretty good method. Let me tell you one thing: no method or technique is foolproof. That's why we call them techniques, right? If you're in the world of naval aviation, we have techniques, tactics, techniques, and procedures. And technique is all that is a technique. It's not 100% foolproof. Doesn't work every time. But if you combine enough of these techniques to get your multi-dimensional trade, your odds, stack the odds in your favor. Again, trying to get that 70 to 80% trade winning ratio in order to be a profitable trader. So what do we have here at BAC, Bank of America? We got that huge outside day we talked about yesterday. Moderate volume, so I like to see a little bit more volume than what is there, but as it is what it is. It made a 52-week high with that wide range bar, so it signals a potential top in the market. I am just trying to refine that trade with a Pierce of 17. I was hoping I could just get a spike up to 17 to be able to sell that. I might modify that trade for a 1679 entry, just a Pierce of 1679, and then I think this Bank of America is done. First target's going to be at least down at the 16 level, and I'll probably take some money off here at support at 1563. So again, I'm not in this trade right now, but I'm looking to I'll modify that entry price to 1679, and we'll see how we fare on that. And I'll go ahead and write that down so I can remember to make that modification on that entry. Hey, another stock I'm looking at buying. I got a small cap. GNK. I was looking at actually this already popped. I was looking to buy this the other day, and I had an entry of 211. I was trying to nail my entry here, and I was being a little too greedy here. I had 211, so I wanted this thing to maybe flush down to 211 and then back up, but it never got down to my price before it popped. So looks like it did 16 cents today, another 6%. So I didn't get into that trade. I was I guess a little too aggressive. I guess conservative is a better word for that on that trade. But that was a nice trade if you could get into that. Again, it didn't hit my price, so I'm not going to buy it. Hey, VISN Media is a Chinese media play. Again, I got an aggressive. And this is the first time I'm looking at some of these stocks down 36 cents. I have a buy here at 1672. I'm hoping just one more flush, one more wide range bar that I can. This is a really wide range bar, $8 move there. I'm just looking for another $3 flush down to this 50% fib retrace at 1672, which lines up with some resistance prior and some support. Anytime you can get resistance and support along the same line, you got a pretty good idea that could be a good buy level. This 20 MA is minor support there. That's why I'm not going with that. So 1672 is my buy on VISN. Another shipper, Dry Ships. I've got a buy on Dry Ships at 369. It looks like it went down today only 2 cents, so pretty small. It's consolidating right above this 20, and it'll probably flush down. Hopefully that 369 level. Again, what am I looking at there? I'm looking at previous resistance and support. It's the scene of the crime, basically breakout where it broke out last time back in beginning of excuse me, end of December. So I'm looking at scene of the crime. Excuse me. I'll get a drink of water. So that's my 369 dry. So moving on to Coach. I talked about Coach yesterday's video. This is I don't know if this was a fake print down to this level, or it actually traded down there. But I had a buy level at 55.17, and as you can see, 55.03 was the low of the day yesterday, and I did not get filled on that. So I'm thinking that's a fake print down at that level. And I like the 55.17 level for a couple of reasons. I got again, support resistance lines there. I got a 200 moving average there, but I'm going to have to re-attack this trade because that fake print down to that level has me a little bit worried that might not be a good level for Coach, and I'll re-attack that tonight after this video. So don't put your trades up for Coach just yet. I bought some corn today, an ETF that tracks the price of corn. I'm in at 30.65. I basically got in at near the open there. Again, managing share size. You can do this. I mean, 30.65. You manage your share size. You're down a couple bucks, no big deal. But I think high volume, Wide range bar usually signals a little bit more down action, so we'll see how this acts over the next couple days. If it's not acting right, we'll look to take a stop out below the $29 level. But we'll monitor this trade as such, and I was looking to buy these couple hits on this bottom here. But today it broke through with fairly above average volume there. So usually that signals wide range bar signal continued moves in that same direction. We'll see how that plays out over the next couple days. DXM is another small cap. I think. Oh, that moved today. DXM. I changed my entry last night. I had a 632 entry, and I moved that based on yesterday's action. Right now, I have a looks like a 598 entry now. Let's see how low it got today. 606 came with it in 8 cents of my entry price. Okay, DXM Dex Media, another small cap. It only trades 200,000 shares again. So you have to manage your share size, manage your position size, so you don't get swung out of this trade, so to speak, and you eliminate the motion. So what I'm looking at here is this gap fill here, just below the moving averages. If I can get a flush through a pierce of $6, I'll look to go long on the DXM. I like the pattern, I like the support level, and I got a gap fill here in my multi-dimensional trade here. And I just noticed this. Is that a trend line? Let's see how accurate. Yeah, look at that. You go right here, and I'm just evaluating the stock as we talk here. 593, 594. Yeah. So that line, we got a trend line, looks fairly symmetrical. Got a gap fill, and you got a pattern there. So we got a multi-dimensional trade. Take a look at the weekly, and I'm evaluating this chart as we speak here on the fly. So okay, the weekly looks like a big wide range green bar, some down action, hit the trend line, got a little pop, and now it's coming back in for the third week. Has a drift lower, and we'll see how that reacts. I wish there was looks like a fairly new offer, since it only has a 20 moving average there for weeks, so it hasn't been on the open market for too long. That came out in April of 2013, so not a lot of action down here. Only thing we have is the last month or two to go by with respect to price action. So again, moderate your position size. If you're going to take this trade with me, I have it buy at the 598 for DXM. Lastly, we'll look at UGA, United States Gas Fund. This is basically, you can tell what the price of your gasoline is going to be based on this. If you can chart anything, you can look to trade it. So if you can chart it, you can trade it. Now, I have a couple master levels here on the UGA. I'm looking for gasoline to continue down. You do have this beginnings of a Head and Shoulders, and again, Head and Shoulders in every trading book you find, so the failure rate is much higher than you would believe. So I rarely trade Head and Shoulders, just purely based on the pattern there, but it's still something to keep in mind, and a factor, a possible factor that may or may not influence your trade. But I just like to draw it in just to see if they play out. So right here we got the first shoulder, the head, and we'll see if it can bounce off this to make this second the right shoulder there. Right now it looks like it went down today. So if it definitely breaks this trend line, I'm looking for it to go down to the 53.67 level, and that's my master level there. It coincides with the pivot there back in the 2013. Looking at the weekly chart on this stock. Let's modify this. So this is what I'm looking at. You got multiple hits on that 53.67 level, and that's where I'm looking to take a buy on that. So UGA, if it gets down there. All right, just a quick recap. Our stance on the S&P and the market in general is neutral to bearish, unless it can trade above that 184 and confirm above the 184 level. We're looking for a pivot date of January 15th. If this market continues to float up into January 15th, we'll be looking for a sell side action on January 15th. My buy on the spiders is going to be 177.50, and I'll be looking to buy that through the 2-time ETF SSO. Okay. With that, folks, I'll look to wrap it up. And thank you for being members here at the Top Gun Stock Trading .com.